So Sean and I remember I first met you in 2016 because it was just after I left the Obama administration. And we've had 3 or 4 conversations over the years, and they've always been really great conversations. So I'm really looking forward to this. Sean Burton is what I think anyone would call a macher. He's the CEO of CityView, and I'm going to ask him to talk about that a little bit. But he's had a series of other jobs as well, both preceding and at the same time as his time running CityView. He was at Warner's. He's been a lawyer. He was chair of the airport commission here in Los Angeles and is now on the board of the Dulles and National Airport Commission, the Washington area, which is a Senate-confirmed position. I didn't know that until I saw that. And we actually are going to talk a little bit about airports because we both have obsessions with airports today. It will relate to housing, don't worry about it. And so thank you very much, Sean, for being here. I just want to start by, and the other thing I'm going to say is between what we just heard and between something you whispered to me, I'm going to go off script and we're just going to have a conversation and maybe not talk about what we were planning on talking about. But you said something I found intriguing to me just now, and then I'm going to come back with something that I plan to ask you. Is you said you were more optimistic than what we have been hearing to this point. So let's just start with that. Why are you more optimistic?
Yeah, and I'll first of all just say that thank you for having me. I'm a big fan of the center and of USC, and so it's great to be here today. My perspective is as a multifamily developer and operator. So I can't speak to industrial or retail or other data centers, but we're in the multifamily business. Just actually earlier this week had the 21-year anniversary of our company, which we co-founded in 2003. And so all we do is multifamily, and we are in the western half of the country. So very heavy in California, very heavy in Los Angeles, one of the largest developers here and owners. But we're also in Seattle, we're all over the Bay Area, we're in Denver, we're in Dallas. So that's the perspective that I bring to this morning. And we're more optimistic generally on California. I mean, I've been hearing about California's demise since we started this business. Regulation is too high, taxes are too high, everybody's going to leave. And we clearly have our challenges, and I don't want to kind of minimize those. But there's wonderful, wonderful opportunity here. You know, we are the 4th or 5th largest economy on any given day. We trade places with Germany. I remind my German friends we have half as many people, which means we're twice as productive. We have incredible.
He's right about that, by the way.
Yeah, and we have this incredible talent here. We talked a little bit. You heard the migration, and that we've lost some folks over the last few years. We actually added migration in 2024. I was actually looking at these stats this morning. We've added about a half a point of new migration in the kind of greater LA area. And if you look at migration by income band, which we spent a lot of time looking at, a lot of the out-migration, most of the out-migration tends to be lower income folks, older folks, more conservative politically. They feel maybe California or LA is out of step with their values. And if you look at kind of higher educated workers and more income affluent, we have pretty good in-migration, including over the last 3 or 4 years. So it's an interesting way to cut it. So we think California has a lot to offer. LA has a lot to offer. There's a lot of challenges here from a regulatory standpoint. I mean, you heard Mitch mention this morning from Cox Castle. I've been working with Mitch and others on kind of regulatory reform, how to try to make LA more hospitable. So we have our challenges, but I think there's tremendous opportunity.
So it's interesting you talk about you work in Dallas and Denver as well as California. So could you tell us a little bit about how the environments in those markets to do multifamily relative to California? Yeah,
I mean it's quite different. Take Dallas for example. I mean, Dallas has a tremendous population growth, right? It's adding 487 people a day in Dallas. We've never seen anything like that before. So there's incredible amount of demand. People are obviously attracted by.
And you're talking about the metro.
Metro, yeah.
Not
when
the
I speak,
city.
yeah, not the city. The kind of MSA, and that's it's driven obviously by a lot of companies are there, lower taxes, et cetera, et cetera. But the downside to that is it's very easy to build. So from a development perspective, there can be real challenges there. There are no supply constraints, and I think you saw this a lot in Sunbelt markets during COVID. as I said, we kind of started in California, and most of our business is in California. And for many years, a lot of investors said, yeah, it's great. You guys are so smart. You're in this very hard to access markets and high barriers to entry. How do you do that? And then during COVID, those same investors said, what's wrong with you? You guys don't know what you're doing. Everybody's leaving California. They're all going to the Sun Belt. They're going to Boise. They're going to Atlanta and Florida and North Carolina, Texas. And now actually you're seeing a lot of capital start to come back to California because we have these kind of high barriers to entry, and you don't have the same kind of challenges from an investment perspective. So I would say that Dallas is kind of open for business, and you're seeing obviously a credible rush there of both housing and incomes. Denver is similar. Denver's an incredibly popular market. It's the number 2 city in the country that millennials say they want to move to. Does anybody know what the number 1 city is? An example? Austin, Texas. That's number 1 where millennials want to move. But Denver did something very interesting, which it passed a high affordability requirement for new housing a couple of years ago. And when they did that, developers rushed to get all of their permits approved before the deadline when it would kick in. And so you have a huge flood of supply that's come in Denver. And now what you've seen is development fall off a cliff because people can't make the numbers work. So you've seen this interesting kind of boom or bust cycle. But those are 2 cities where it's significantly easier to kind of build and develop new housing than it is in Los Angeles or a lot of Southern California markets.
So that brings up, I think, a really interesting point about the share of units that go to affordable housing in order to get entitlements. I think about how in London, I'm going to not get the numbers quite right, but before Mayor Khan was mayor, in order to build new housing in London, you had to set aside something like 15% of your units as affordable. That went basically into council housing. And he raised it to something like 25%. And for those who want to Google, those numbers are probably not quite right, but they're more or less right. And you basically went from, at that 15% level, things penciled, and at 25%, things no longer did.
Right.
We have transit-oriented communities here in Los Angeles, and there are areas where basically the value of the rent gained is high enough that you do make it work relative to the value of the income lost by the set-aside units. But there are lots of parts of Los Angeles where that's not true. And so the transit-oriented communities program, which I think in principle is a great idea, still doesn't encourage development. Do you have any sense of what kind of ratios are sensible? Because as a political matter, I think the only way you're going to get people convinced that it's okay to give developers the ability to build more in many of these constrained markets is by requiring some sort of set-aside from them.
It's a great question, and I think it's important to remember, too, the kind of vast majority of restricted, kind of affordable housing that's built is built as part of other larger market rate projects, right? So it is important to do. It depends on obviously depends on the location. It depends on what affordability level you need to build to, but it's kind of 5 to 20% is the range. Above 20% of required affordable in a project makes it very difficult to pencil in these markets. And by the way, that was all pre-ULA. I mean, if there's one theme you're going to hear this morning, it's going to be how difficult the mansion tax has made development, if not almost impossible for market rate in Los Angeles. And I say that as someone who I think has built 8 million square feet of apartments in LA, in the LA area in the last 10 years. We're building 0 now, right? We delivered 1,000 units last year. We're delivering 0 this year, 0 next year, 0 the year after. We're building in other markets. We're building in Hawthorne. We're building in Culver City. We're building in, again, Denver, Dallas. But you can't make it work with the mansion tax. It's just binary. So that's hopefully something everybody takes away from here. And we're trying to work with the mayor and elected officials to, as Mitch Mender said earlier, to kind of educate them on these issues, to understand the impact. It's really about an 8% hit to a project because you'll not only pay your 5.5% tax, but whoever you're selling it to is calculating the net present value of that tax. So it ends up being really, really challenging. And we're trying to work with the mayor and her team to say we need a kind of a fixed ULA plan. ULA was sold as a tax on millionaires and billionaires and their homes in Bel Air and the Palisades and Brentwood, and they should pay their fair share. I think what people didn't realize, it was going to be a tax on all residential and all commercial real estate, and that would really stop new housing being built, which is what drives up rent. So we're working with with her team to try to see if we can build some consensus. We need to probably do it through another ballot initiative because of the way it was passed. It can't be done with the stroke of a pen. But one interesting point is if you look at the revenue that has been collected by ULA so far, it's a lot less than they said it was going to be, but still about $500 million in a city that's got a huge budget deficit. That matters. Only about 13% of that revenue comes from multifamily buildings. All the rest comes from other real estate. So one of the things I think you'll see is a push to see some sort of fixed ULA initiative so we can start building housing again.
But it is about 50% commercial and 50% single-family housing.
Yeah.
So it's having an impact on commercial real estate.
Yes, exactly.
More
beyond
broadly.
multifamily. Yes.
And if I can just put in a little ad for the little paper I wrote at the end of the report on it. I mean, one of the things, we saw this enormous drop in multifamily transactions. And I've seen people say, well, it's because of the macroeconomy, interest rates have gone up and so on. But what we do is, as a baseline, we look at transactions in LA County outside of the city. And basically, since ULA has been implemented, it's been flat. Whereas within the city of LA, you've had this really massive decline. So you can't, if it were things other than ULA, you would see it affect both.
Right.
And you're not seeing that. So there's, at least in the short term, there is no question that it's having an impact on transactions. We're not going to know for sure for it takes 4 years on average to get an apartment building built in Los Angeles. So it's going to be, we have research on that.
Sure.
So it's going to be 4 years before we know the impact on deliveries. But anyway, take a look.
I mean, I brought a couple of slides here, not to spend too much time on it, but if you just go to slide 4, that just shows the drop that we've had in permits for residential units, right, as an example. I mean, if you think rents are high now, let's stop building any new housing as we keep adding population, as we keep creating new households. Let's see what's going to happen to rent. So this is really a crisis issue, and this is something, again, we talked to the mayor and her team about. If you go actually one slide before that to slide 3, earlier Gino mentioned the regional housing needs assessment. This is an assessment that is done by local government with the cities to say, how many housing units do you need to build to keep equilibrium? And as you can see, we need to build about 450,000 units. And this is city of LA, by the way, not county, not MSA. City of LA needs to build 450,000 units per decade. And that shows you a breakdown there of the majority of those need to be market rate in order to make the numbers work across these different bands. In the heyday, right, in 2010 to 2019, right, when, again, interest rates were zero and money was falling off trees and everybody wanted to build these things, we built about 15,000 units per unit. So we have to build 4 times what we were building when interest rates were pretty much zero, and that was before ULA and some of these additional barriers that we have. So it's an incredibly difficult task. I don't think it's possible to do that without massive fundamental change, and these are the kinds of things that we talk to the mayor and her team about and council members to say, if you want to even have a chance at hitting these numbers, we need to think about real estate development and entitling and permitting and density completely differently than we do today.
So I want to ask one more question about Southern California within the national landscape, and then I want to drill down more into Southern California and markets within Southern California. So I was thinking, as I was listening to Gino talk about Orange County, about how people like it because it's clean, because the schools are good, and so on. And it brought to mind a Cole Porter song called I Happen to Like New York. And in that song, there's a line, I even like the stink of it.
Sure.
And it made me think of how my preferences have nothing to do with the world's preferences, because I love living in LA in part because it's messy. Yeah. And I don't like places that are too orderly. And my 3 favorite cities in the US are New York, Chicago, and LA. And my 5 favorite states are California, New York, Illinois, Maryland, and Massachusetts. Okay. So I look at migration patterns since 2020. All of my favorite states are in the bottom 7 in terms of out-migration. They're the worst. And I looked at the top 5 states, and with one exception, I would never want to live in any one of them. Nothing against those people, but I wouldn't want to live in. The exception is North Carolina, actually. I really like North Carolina. But it's like, I couldn't live in Florida. Sorry, not my thing. Texas, North Carolina, and I don't remember the other 2. The reason I'm mentioning this is I think when I hear your optimism, I tend to share it, but does that mean we're a little delusional? And I like to say things like the Bay Area, Singapore has the highest GDP per capita in the world, but the Bay Area basically is the same population as Singapore, and the Bay Area has higher GDP per capita than Singapore. So, it's Bay Area is probably the most productive place in the world. But I look at where people are going, and I think about my own delusions until Tuesday night about how the world is. And, I wonder if we want people to come back to California, what do we need to change? And is it just about housing, or is it about other things?
Yeah, look, it's a great question, and I think it's about a lot of things. I mean, we talked about quality of life here, and some challenges we've had around crime and homelessness, and that's a real impact, right? That affects the way people live every day, and it affects our brand, right? As a state, as people are making choices, as companies are making choices about where to locate. But I think you've also seen California moderate. I mean, if you look at the election results, the state election results, we're not talking about the national election today. If you look at the state election results from Tuesday night, I mean, the state really moved towards the center in what you saw there. I mean, Prop 33, which was a really challenging provision that I believe would have devastated the multifamily business in the state, lost handily, thanks to the California Apartment Association and others who took a real leadership role on this. Prop 36, which was, kind of a tougher on crime statute, passed with over 70% of people voting for it, despite the opposition of the governor and a number of the major newspapers. It's pretty staggering when you think about it. I mean, you had a new DA elected here by, over 25 points who was not a Democrat. That's pretty staggering. They threw the DA out in Oakland. They threw the mayor out in Oakland. The mayor of San Francisco is losing. So you've seen a moderation.
And the County Board of Supervisors in San Francisco is turned over, correct?
Right. Yeah, that's turned over as well. So I think you've seen a moderation because there's a recognition that perhaps the pendulum swung too far, and there needs to be more balance and create a more hospitable environments for some of these things. So I think that's what California has to do. But what we do have, and we can't forget, is we have these incredible industries that are here that are very hard to replicate. What you have in Silicon Valley is very difficult to just recreate somewhere out. And there's pockets in other places. But you also have these kind of anecdotal stories. The Wall Street Journal wrote an article 9 months ago about all these tech entrepreneurs that had left during COVID and gone to Florida to start their new firms in Florida because of the tax rate. And a bunch of them had come back because they said, we simply can't find the talent to run our companies. We don't have enough engineers. We don't have enough programmers.
Andreesen Horowitz closed their Miami office a couple of weeks
ago.
Exactly.
So it's not, that doesn't mean those places won't boom for other reasons, but it's not easy to recreate. I mean, you take a city like Los Angeles, because of institutions like USC, we actually graduate more engineers in Los Angeles, than any city in the world. That's incredible to have that sort of talent base. Again, hard to replicate. We have this whole new aerospace, new space industry that clustered around SpaceX, which is really kind of advancing what had happened before in the aerospace industry out of the 90s. So there's, we have the entertainment industry, the gaming industry, healthcare. So you have these incredible driving factors that are very difficult to replicate elsewhere. And it's one of the reasons that we're now 4th or 5th in the economy. And we were 20th in the world a generation ago. So you've seen, despite all the challenges and getting in our own way, you've still seen this incredible growth.
So let's talk a little bit about micro markets here in Southern California. So you heard the forecast. You work in different places. What are places in Southern California that you really like working?
So
could be a model for other cities.
Yeah. So look, we love San Diego. That's probably my favorite market as an investment market in California as a multifamily investor. And Mitch Menzer talked about this earlier. This complete communities plan that Mayor Gloria put forward basically makes it really predictable if you're going to invest and spend money and develop down there. That's also, they also have a great...
And excuse me, Sean, so how does that interact with CEQA? I mean, you say predictability, but people say wherever you are in California, you have
I feel like I should call on Mitch to answer that question. But you kind of have a master, master EIR that you can tier off of. I mean, I'm dumbing it down because it's to the level of my extent of, Mitch is nodding, says I'm right. But basically, you don't have to go and do a significant environmental impact report or mitigated negative declaration for every project. So it makes it much faster. They've committed to these kind of 30-day turnarounds and comments. You go to the window there and they call you a customer. Like that doesn't happen in LA. You're treated like the enemy in a lot of markets when you come in, and why are you bothering me, and what do you want to do, and what are you trying to take, and versus they view it as a benefit that you're investing in their community and you're building housing. And the mayor down there gets a lot of credit there, and one of the things we're trying to bring elements of that here to Los Angeles and get people on board. But and they also have San Diego's got incredible biotech and research and other driving factors for that economy. So that's a wonderful market. Gino talked about Orange County. I mean, we like the Orange County markets quite a bit. There's a lot of industry down there. It is easier to get things done, although not easy. And these are all markets where you simply haven't built enough housing over time, so there's built-in demand, and you feel like if you make that investment that there'll be a decent return for your investors. And I think that's a really important point, and we spent a lot of time talking to elected officials about that. I mean, we raise our capital from all over the world. We have pension systems and insurance companies and major opportunity funds, and they will tell you that they love California for all the reasons that we talked about in terms of the supply, demand, and balance of housing, the incredible industries, the talent that we have here. They love our weather, but they will say our canvas is global, right? We can build a data center in Northern Virginia and invest in that, or we can buy a retail center in Berlin. If we're going to do apartments in California, particularly in LA, there's a level of political risk that we're being asked to take here, and we're not compensated for that. And they say we're fiduciaries for our pensioners or whoever we represent, and if we're going to look at all these different options and we're going to invest with you, how can you tell me that your city council isn't going to say people don't have to pay rent for 4 years, or that there's going to be a statewide initiative that basically changes how rent control is done? So it's important for people to remember that investors in capital is global. It moves very quickly. It's very educated. There's lots of options, and we as a city and a state have to make it as attractive and as predictable as possible, so that they can take advantage of the wonderful opportunities here, and we get all the benefits of those jobs and that housing.
So I'm going to ask you a really unfair question, then I'm going to open it up to the audience.
Okay.
But CityView talked about worries about rent control.
Yeah.
I mean, the AIDS Foundation has pushed it 3 times. They've lost 3 times by 20% and more. Are we finally done, or and I don't know whether Prop 34 is going to pass or not, but that's why this is an unfair. I'm asking you to make a forecast.
I should ask Fred that question. See, is it finally done? I mean, Fred, how much should we spend in against Prop 33? This $100 million? Yeah. So we had to raise and spend $100 million to fight this ballot initiative. 3rd time in 6 years, right? Or 4 years. 3rd time in 4 years we've had to do that. Imagine if we could take that $100 million and put it towards affordable housing or other things. Prop 34, which you mentioned, is currently leading in the polls. If Prop 34 passed, and if it holds and it passes, it will prevent this individual from continuing to spend these kind of AIDS healthcare dollars on these political issues, and it would change. I think the state has spoken clearly, right? Again, 3 times in 4 years, and that to beat something by 20% is really hard in California. That it doesn't want this, and it doesn't believe in it. So I hope it's over, and we can have more productive uses for our capital and time to actually solve the affordable housing crisis.
Yeah, it's just how many signatures do you need to get something on the ballot?
Yeah, I don't know, million, 2 million something.
Yeah, and instead of 40 million people.
So
anyway, we have a few minutes. Let me open it up to the audience. Any questions for Sean?
Excellent, Sean. Thank you very much. I'd like you to address PLAs and the benefits that you see as a developer when you are forced. Do you agree, or do you sort of get forced into those agreements?
Yeah. So we've done project labor agreements on some projects, not on others. I also worked in the as the professor mentioned here. I was chair of the airport authority for a number of years in Los Angeles, and we did a $20 billion modernization, and we used PLAs for all the PLAs, project labor agreement. And I think that they're quite valuable, particularly for larger projects that are very complex. I will say during COVID, we had a project labor agreement at LAX for a number of the things we were working on, and the people showed up every day for work. The work was high quality. The project continued to move. Like there's a real advantage to having professionals who are really good at their task working on that. They don't work for some smaller projects. The price is just too much for smaller multifamily projects and wood frame projects and those kinds of things. The cost just become prohibitive. But in the right context, I think they can make a lot of sense. We actually put PLAs in place in Virginia as well in my capacity on the airport authority there, and it's been productive and I think positive.
So we all know that supply is the biggest issue for affordability. And then we look at the backers of the initiatives such as ULA and some of these other more recent ones in the city of LA. And it's all by, not all, but a lot by unions, Unite Here, DSA council members. Is there any initiative from the mayor's office or the governor's office to sit down and try and educate them that they're actually hurting their own people the most? You look at the supply, the Class A, $10,000 a month, or $5,000 plus rent. You got more vacancy there. Those people, but the ones that are moving out are lower income. A lot of them, you look at the base of unions. They're pushing their children and their future grandchildren out of the state. Is there any initiative to try and educate them on that?
So I would say that I think the mayor's office and the mayor is very focused on building more housing. She realizes that she's been focusing on homelessness, but if you don't build more housing, you're going to create more homeless issues because people aren't going to have a place to move. So I think there's definitely a focus there. But I think that what I've seen the biggest challenges in Los Angeles, particular to housing, it's not union issues. It has been the challenge of going through neighborhood councils, that every council person basically has a kind of a fiat or gets to decide exactly what they want, almost no matter what the law says. So you have to spend a lot of time working through that. We've been working on a project now for 2 years. We've had 40 different meetings with communities and the council office to try to move things along. So that sort of delay and uncertainty becomes really challenging. One thing that we did for the mayor is we showed her an example of a project that we're currently building across from SpaceX in Gardena, Hawthorne, so 266 units. And we said to her, if we take this exact project, we moved it across the street into the city of LA, and rents were the same and land costs the same, and we permitted it just as fast as LA, which you never could, but if everything were exactly the same, we would have to charge $600 more per rent for a one bedroom to get the same return that we get in Gardena, simply because of the additional regulations LA adds and Measure ULI and the mansion tax. So trying to use real world examples like that show this is why housing isn't getting built, and this is what's driving up rents for people. I mean, people run around saying rent's too damn high. They're right, but the way to solve that is building more housing. So that's what we continue to kind of work on and try to educate.
So one more over. Yes, sir.
Yes, on the affordable housing sector, I know we had a lot of HHH investment. Does that made a dent on the affordable housing? What was the outcome of that?
It's well intentioned, but when it costs $750,000 or $800,000 per unit to build a unit of affordable housing, spending $1 billion is a drop in the bucket. We had that chart up there. I mean, we need 57,000 units per year. So spending $1 billion and building 1,200 units over 4 or 5 years isn't going to do it. I mean, you need to have affordable housing programs, but the way to unlock affordable housing is to make it easier to build, to require 5 or 10 or 15% of every new market rate project to have affordable housing. And put in no money from the city, like zero subsidy, just create a system where it can get built, and I think private capital will rush in and do it. That, from our perspective, that's the only way to really address this issue.
So with that, we have to move on. Sean Burton, thank you very much for spending some time with us this morning.
Thank you. It's great to be here.